plan. I know by tonight, my profits will smash. I'm gunning, yeah. Deposits are hitting my base. This is real life, not a phase. We don't just do this for play, yeah. Catching these profits today. Money is all in the way. Chairman, I'm running my race, yeah. Deposits are hitting my base. This is real life, not a phase. We just don't do this for play. Catching these profits today, yeah. Money is all in my way. Chairman, I'm running my race. My entire team is my life. My entries are always precise. My exits are all time concise. My future is looking real bright. Even though BCLS is all in the plan, I know by tonight my profits will smash. These vectors will dash. I'm hitting TPs, alright. Split a click up fast, gotta cash so fast, so you know what the deal. Don't trade the trade, cause I'm paid to wait. I got these niggas like, man, this ain't real. In the zone 1, zone 2, hit a lick for the price, yeah, kill what we kill. Hit the red pill, always on the blue. Can you see this damn all on my grill? Pick up the moves, pick up the weight, all up in the markets all day. Pick up the profits, markets are thoughtless. I'm catching the whole back again. We are the nation, and we stand proud, repping all this cash all deep in your face. Ice on froze, nobody knows what's coming next. Hyperdrive's the way. Yeah, pull up, yeah, whip back. And it's force funded, killing the game. I got it, I'm profit, my entries to trigger, so it's true that the gun did my chicks bad. And I'm not fronting, and she's even Europe, that London. If I show up in the kill zone on time, yeah, I'm gunning, yeah. Deposits are hitting my base. This is real life, not a phase. We don't just do this for play, yeah. Catching these profits today. Money is all in the way. Chairman, I'm running my race, yeah. Deposits are hitting my base. This is real life, not a phase. We just don't do this for play, yeah. Catching these profits today, yeah. Money is all in my way. Chairman, I'm running my race, yeah. I'm gunning, yeah. Deposits are hitting my base. This is real life, not a phase. We just gon' do this for play, yeah. Catching these profits today. Money is all in the way. Chairman, I'm running my race, yeah. Deposits are hitting my base. This is real life, not a phase. We just gon' do this for play, yeah. Yes. What's going on, family? What is up, family? How are you guys feeling in the Chizzy chat? One time for your boy. Go ahead and drop those locations in the chat as well, because we are live right now, family. We're about 20 minutes away from the federal funds interest rate decision, which is a very, very important event overall that can absolutely dictate sentiment in these markets, family. All right, so I'm excited to be here with you guys all. I do have the man, the myth, the legends, the boy Skaggs in the building with me as well. Shout out to that boy Skaggs.
You guys know when we come on these calls and do our fundamental side of things, it gets very, very interesting. It gets very, very interesting, family. So we're going to go ahead and break this down in just a few. Go ahead and continue dropping those locations in the chat. Smash the like button as well one time. Right? The goal is 100 likes. Let's get 100 likes by the end of the stream. The goal is 100 likes. Yeah. We be getting, we know it. I think up a 50, I show it. And 39 million account so it won't blow it. Yeah. Taking our whole team bankroll. Seen a million, I got motivated. Took my 9 to 5 and now they hating. You should see all they faces. Now I had to go make some changes. And bitch, now I'm elevated. Seen a million, I got motivated. I see we got Florida in the building, Columbia, what's up? Brooklyn, New York in the house. How are you guys feeling today, chat? And now I'm elevated. All right, let's go ahead and get into this real quick, family, because again, we are about 16 minutes away from the actual release. Now, again, just keep in mind, family, the whole goal isn't really to try to force a trade. The goal is just to see what the news comes out as, communicate, have some type of dialogue as to what we expect after the news. And if an opportunity presents itself, then yeah, we'll pull the trigger, right? But the whole intention is just to take in the data, consume the data, come up with some type of a sentiment that we feel like the smart money is going to be aligning themselves with off of the data. And then after all that, then we'll figure out if there's any opportunities that make sense for us. You know, but for the most part, it's been a very, very slow morning, slow day for us. We really haven't, I personally ain't take no trades at all. I haven't called anything out neither. You know, so it's been a very smooth, slow day because I'm focused on what's about to happen in the next 15 minutes, right? You know, but like I said, we do got the man, the myth, the legend, my boy Skaggs in the building. Skaggs, my bro, I appreciate you, bro. Are you ready for this news release or nah?
Yeah, man, I'm excited to see how it comes out.
Give me 1 second. Give me 1 second, bro. Give me 1 second.
Going forward here, we are also looking at some projections coming out. So, yeah, this is really just going to give us an insight to the next couple of months, which is super important. So, yeah, like you said, I haven't really made too many moves in the market this week. Tried one or two things maybe, but generally keeping it pretty light. And then obviously if there's something to take advantage of, you know, we'll do that. But yeah, excited to see what Mr. Powell got to say.
Oh, yeah. Yeah, no, it's going to be a good one, family. Obviously, as of right now, what is the expectation? You know, the expectation is for them to raise interest rates by 25 basis points. I don't see no reason for that to, you know, for them to sway away from that. I truly believe that they're going to do that 25. With the possibility of the next CPI, or not CPI, but the next interest rate decision, them either staying with 25 or even potentially pausing rate hikes in total, right, in general. Right, so there's a lot of stuff that we're going to discuss, family, once the news does come out, because depending on how this stuff comes out, and then depending on what's said at the actual press conference, that can give us some type of an insight as to what we should be looking for moving forward as well. Right, so I'm excited for that, man. Go ahead and smash the like button one time for us, family. Right, it does mean a lot for us. Again, the goal for today is 100 likes. We don't have 100 people on just yet, but the goal is still 100 likes. So let's definitely go ahead and get as many of you guys to smash that like button one time. And yeah, hopefully by the end of this stream, we are, you know, able to go ahead and do what we do. Okay. But let's see what you guys are talking about in the chat one time. Let's see. QGT, what's going on, my brother Will? Shout out to you, my brother. I appreciate you for tuning in with us today. All right. Hopefully we're able to give you some value. And we'll see what this goes, man. But yeah, so this is what we're waiting for, family, right? 15 minutes, just under 15 minutes, and we'll definitely go ahead and take a look at what the market gives us. What I would like to see right now, let's actually go ahead and talk about our expectations based off the news release, right? So, Skaggs, I want your input as well, bro, right? So, if they do end up raising interest rates by 25 basis points, and I'm going to give my thoughts as well, right? But what do you believe the markets are going to do off of them sticking the course to what is actually expected, right? Like, what do you think is going to do for the dollar's perspective, indices, equities as a whole, right? Like, what do you think is going to happen to the money markets, bro? And then I'll give you my thoughts and opinions as well.
Um, I mean, I would imagine they would continue down. My worry, though, is that the market isn't pricing in a potential pause.
Mm-hmm.
And if that's the case and we don't pause this time and don't really signify a pause, the market could be a little disappointed, so to speak. And it's possible that maybe we're already a little bit overextended anyway. But I would expect the dollar to continue selling off. I do expect Powell to try to speak some confidence into it, but I don't know if he'll be able to achieve that. Again, it really depends on what the market's overall expecting. I know a lot of people were expecting at the very least a mention of a pause. But again, I have my reasons to believe that Powell will probably mention it and be questioned on it, but I don't think he's gonna lean that way. I think he's gonna again kind of reiterate a lot of what Janet Yellen said yesterday, how again what they did was kind of like a one-off thing. They're open to doing more but less, which means they'll print more if they have to, but they don't want to print more than they already have.
Mm-hmm.
So yeah, it's some interesting points, but I do think the dollar continues, or at least initial reaction is down. That would probably give us the best opportunity to fade it into Mr. Powell speaking, I think. Um,
Yeah, that'll be
so yeah,
interesting.
man. I mean, like, I don't really have expectations because I think the market itself has enough expectations. But it's like, everybody's kind of expecting the same thing. Everybody's expecting the polls to mention the things about the banks failing, and so
Yeah.
yeah, hopefully we get a nice spike down because I do want to go long dollar, um, if we can clear this 102. And that
Yeah.
might not be today, by the way. Like we might spike down with some nice volume, and it might take me like a day or two to actually find an entry. But again, pending what's said today, I will either lean towards that or just throw the idea away completely.
Yeah. And I'm with you on that. I do believe that we should see more downside as well. But what I'm actually interested, man, is if we're able to, and I think Kyle has spoke on this too early on our call, if we are able to go ahead and maybe clear this trend line liquidity, clear the liquidity up here, like if we initially spiked up off of the news, that could give us an opportunity to go ahead and short the dollar for sure. Right, so that's something that I'm hoping for, just so that we could go ahead and sell off the dollar down into those 102 levels, 102,500, which is what we've been talking about for weeks now. So if we see an initial spike up, though, I'm going to be ready to go ahead and pull the trigger on probably something like a Euro USD buy. All right, look for some upside here. Like if this thing spikes down, then I will be comfortable looking to go ahead and look for some opportunities to go long again.
Maybe it would depend on why we spike down. Because like my problem is I can't like what would really give the dollar immediate demand, right? So like what result are you looking for to back that up? Because like for me, like that would be like again, like maybe they do the 25. Again, maybe they don't mention the pause at all, you know,
Mm-hmm.
and then like I mean, I would almost think for like straight up like that, you would probably need. I don't know. It's tough. It's tough. I don't see what immediately sends us up
I mean, I
is the
think
problem.
for me, I think yeah, I definitely get what you're saying. I just believe just the fact that they're actually raising rates itself could bring some short-term strength here. Just to go ahead and
I
obviously,
feel you. You want it to stay under that structure, or do you want it to kind of pierce above?
I would love for it to stay below this whole structure right here, but I'm not opposed to it also spiking above there neither.
Yeah, like that 103.60 maybe.
Yeah, yeah,
Like
like
not much above. I'm not saying like a clear break up into the imbalance, but like just like a little love tap to the liquidity up there.
yeah, that would be pretty nice. I mean, if listen, I'm prepared for all that, right? Like I just initially want to see that spike and then start looking for opportunities to go ahead and go short
Yeah.
if
I
we
mean,
see
I
the
still
spike
have
first.
partials running that would support that. Like, I mean, if we get that, like if EU does spike down and 'cause, I mean, I could see how the continuation is very easy if that were to happen. I just think I struggle with the what the result from the news would be that would drive that.
Yeah, I mean, we
I don't
shall
know. You let
see.
me know when to push the button, bro. I'm with you.
I mean, I'm gonna just see. Again, this is only if we initially spike up. If we spike down to what you're saying, like if we initially spike down, then obviously I'll be looking for You know, not anywhere down here per se. I mean, even down here, depending on how price action plays out. But obviously, my main objective is to look for some longs below that 102,500. You know, so
Yeah, for me to buy off the 103 level, it would have to be a pretty shallow break. I don't even know if I would trust that honestly, because
yeah,
like I'm really only a buyer under that 102.50,
yeah, I'm a
which
long
again,
term
like
buyer off of that.
yeah, it's like even if we did spike the liquidity just today, like 102, like 80, like I don't know how much I would trust that to give
Yeah,
me like a longer term pullback. Because I know if we clear that 102.50 and we accumulate down there, we like reject off nice that 102.50, that can hold for like maybe 2, 3, 4 weeks.
yeah, I agree.
Because that's a really important area on the macro.
Hell yeah. If we hold this 102,500, bro, then I'm definitely gonna be looking for a big move to the upside for sure.
Yeah, I just think I mean, the interesting thing too is the projections. Like, there's a lot happening this week because I forgot it was a projection month as well, which means we get updated roadmaps for 2024 and like 2025. So we'll actually see if they've changed any targets or
Mm-hmm.
honestly, that's I wasn't expecting that this week, to be quite honest with you.
Yeah, I mean, let's see what the market gives us though when this comes out. Let's see the
Let's
projections.
see what chat's saying. Chat, what do you guys got? What do you guys got? What levels are you guys looking at on the DXY? Let us know. Share it with us.
Man, these projections could be everything that we need to know. To be honest with you, that is gonna
Yeah,
be.
because this is where it comes in is like even if they do 25 now, right? It's like are they going to because again, look at the highest projection that they have there, right? Previous is 5.1, which means again, after this, we're at our room. It's like the next like they couldn't even do like to be within that, we couldn't even technically go another 25 basis point. They'd have to do like a 12 basis point, like a 12.5. I cut it in half again
Yeah.
to get to that 5.1.
Mm-hmm.
So yeah, either they're going to extend the room and we're going to do like maybe two or three more 25s, or they're going to pause. But based off past projections, again, we were coming for a pause anyway, which is something you guys heard me talk about over the past months. If you guys have been with us, if they're going to keep talking about how we're getting closer and closer to the end of the road of like what their target rate is.
Yeah.
And today we'll find out on whether or not they're extending that target or if they're going to keep it as is. So it's honestly a pretty important day.
Yeah, it really is. It's gonna be interesting to see, man. I don't know. I think just because of I don't know, bro. Honestly, this is what happened the past couple months. This entire year has been a little bit trickier to time because there is so much conflicting
Well, that's
data.
because things are changing.
100%,
It's
right?
like, yeah, like the set, like you're getting mixed data and you're getting like all sorts of different signals.
Mm-hmm. Yeah, so it's definitely a little bit tougher, man. So today could definitely give us an insight as to what's really
I mean, like look at
gonna
the
happen.
signals we got today on the pound with their inflation numbers. Like their inflation's going crazy,
Insane.
So it's like, I mean, like yeah, our CPI has come down, but generally speaking, in terms of like world standards, we're like the one off. Like not everywhere has been lucky enough to actually have inflation fade off like that.
Yeah.
So
Yeah. Let's see. GBP's CPI should remain. The traders, the Fed goes 2%. The system isn't broken yet. So keep the fight going. The year deal with the banks will force dovish actions.
yeah, but see, like the system isn't broken yet. Like the system is not. It's so the which so most people consider the system breaking is not actually the system breaking. It's a natural result of the system. It's actually a part of the system. It breaking is actually an aspect that needs to happen. Again, we talk about big bank buy small bank all the time,
Yeah.
right? Big bank buy small bank. That's basically what this is. Like all these little tinier banks get liquidated and they just get more centralized because the bigger banks are the only people that can buy them out. So that's how they remain centralized power. So it's not again, it's not like when you talk about the system breaks on purpose to reinforce the system stronger. So it's
Mm-hmm.
kind of like again, it's ebbs and flows. It's not positive or negative.
Still
It's
what it
very
is.
simply just the opposite of what like, again you attach positivity and negativity to it because most people in this current part of the cycle are down bad. unless again you know how to work the cycle to your favor. But again, like it breaking and like banks going bankrupt and like things like this failing and like happening, like it is again, it's by design. They tightened the money. This is the whole point of tightening the money was to do this, is to take out the people that are over leveraged and overextended and that generally speaking have too much market risk. And then those people get bought out by people that have more money at a discount, which allows them to refuel the system. So it's all by design at the end of the day.
Yeah.
Um, like it's not, again, some people make it seem like it's this crazy thing that never happens, but the truth is it just happens all the time. Or at
Yeah.
least historically within the last 100 years. I mean, obviously monetary systems change over like the super macro, but
Yeah. It's
the
interesting.
system in its current state is working as operated.
Yeah, for sure. It is a huge day though, D Warren. I'll tell you that, man. It is a very big day for sure. Let's see, short USD. I mean, there's a possibility, right? There's a
Yeah, it seems like a
possibility.
lot of people are that way.
Yeah, it tanks. There's a possibility that we go up. There's definitely a possibility for the market to react in both ways, depending on what comes out.
Wasn't GBP almost 100 basis points? No, I think the pound is only doing 25 basis points, I think.
Well, they were doing initially 50, but they're planning on doing only 25 their next reading tomorrow.
Oh, the next one is okay. So this is the
Yeah,
first time they're going to 25. They should change that.
yeah, I'm gonna see right now.
Yeah,
Yeah,
they they should revert that back.
yeah, and that's what I'm saying. Like, even though
They got to
tomorrow,
revert course.
like they're expecting tomorrow for it to come out 25,
Honestly, if
but
anything, pound pairs might shoot if they do. Like, I mean, if this is the first time. Maybe they did take those numbers into account. Maybe the forecast is wrong and they do. They should do a 50 though.
hell yeah,
It might
hell
it
yeah,
might it might shake up their markets a lot, but I think that's probably necessary. But
yeah,
anyway, let's see what the Fed here does.
yeah.
See
So
if you
we
get your spike up. If I get my spike down,
we got less than a minute, family. We'll see what the market does give us. Let's see. What are your guys' thoughts though? Go ahead and drop your predictions, family. Are we gonna go bullish now? Again, this is if we come out as expected, and we do a 25 basis point rate hike. If the projections stay the same, all right. Because if things come out a little differently, then I might have a different bias myself. And I'm pretty sure Skaggs will too. But
if projections come out higher, you're probably going to see a stronger USD.
yeah,
And that
exactly.
actually might be one of the things that you get your spike up on. Will probably be if the projections get extended there.
Yeah, yeah, I agree. So we're 15 seconds away. I see I want spike down. I see long USD, but
I
double
know I'm
strong.
late, but I feel like we get an initial spike up, and then we start fading off on that little candle you have marked.
Well, let's see.
That's exactly no. It spikes down. DXY spikes down. EU spikes up.
Let's see what we got here. So we got initial spike down.
Beautiful time to see if we can fade
All right,
this.
so we did do the 25
They
basis
accept anything?
points. Look at this. They're actually lowering their
They
projections.
contracted. Yeah, they're looking to pause. They're gonna talk about pausing.
Yeah, 100%, bro. Wow. So they're actually lowering their projections, and I'm pretty positive it has to do with this whole situation with the banking system, because
Yeah,
they just can't keep on raising interest rates while we're already seeing banks fail. That's just, and they're the reasons why these banks are failing, right? You
I
know,
still think Powell comes in to speak confidence in the market, though.
yeah, this is interesting. You see how this came out, family? Like it came out way low, almost a full percent lower than what they were initially. This is easily pause talk right here. Like they're definitely going to be potentially pausing next decision for sure. Or like even the second year, they're talking about from 4.1 to 3.1.
Oh
Interesting.
no, I forgot to short GJ today.
Interesting. Interesting. So
I don't
gold
know
is,
if they're. Well, let me see. Hold on, let me look into some of this real quick.
let's see,
They did
UJ.
do 25, right? So they did
Yeah, they did.
25. Let me look at the projections for today. They still don't even have them up on their website. Oh, there they are. All right, so let's take a look at projections that they have.
You could bring it up too, bro, if you want on your side.
Yeah,
Let's see.
let me just take my quick look at it.
Yeah, for sure. I'm not even gonna lie. If we do sell off for GJ, bro, I'm buying at 161 400. I'm gonna take that chance. That would be interesting. Let's see.
No, you're only it's only gonna fuel yen.
It definitely could, obviously.
See now I'm at a tough spot because now I'm trying to consider, do I want to close some of my buys or do I want to hold? Because
Yeah.
like today would be like a nice day to get paid on.
Hmm.
I still have the EU buys open from 105 from the signal I set in the premium and from 106. And I still have gold buys from 1916, but the gold buys aren't even impressive because the fucking gold is retraced so much.
Man, listen, man. If
Yeah,
we
interesting data, family. I'm gonna pull up the projections here in a second. I just want to pull up the previous projections as well. And I have to go back into 2022 for that.
listen, family, we get below this 102.50, man. I'm gonna start looking for something. Interesting play here,
Yeah, so here I'm gonna share my screen real quick just to show everybody the difference in the economic projections here.
for sure.
Actually, 1 second. So let me close some of these up.
I'm in agreement with that. I feel like if we go that liquidity, we could start.
Okay. Here, let me hijack this. All right, family. So let's take a look. This is okay. So this is December's, right? So this actually released December 14, 2022, which is before today, the last time we got projections from the Fed, right? So there's a whole bunch of stuff we can look at inside of here. Obviously, they have projections for, PCE inflation, core PCE inflation, what they expect that to be, the median, the central tendency, and just the broader range in, again, various years. So the end of 2022, 2023, 2024, 2025. So really, we're just looking at the federal funds rate. Obviously, all the information is important, and you can dissect all of that a lot deeper. But we're gonna just look again at what they project the federal funds rate to be. So again, for 2023, they expected it to again hold it around that 5.1, and 2024 to kind of start heading down, back down to that like 4.1 range. Taking a look now at expectations, they're actually looking at. Hold on, is this actually, do I have this backwards? I might have this backwards. 2024. Actually, these did not change too much. They actually went a little higher, funny enough. What did investing.com say? What did they have the wrong information here?
Why? What are you thinking?
Interest rate projection, Q1, second year, Q1, first year, Q1. They have 5.1, 3.1, and 4.3. No, it's the same. I could have sworn I sold this at 3%. Maybe I'm wrong. Okay. Interesting. So yeah, they're actually still I don't like the way this displays. This doesn't display in the right order. It should be 5.1, 4.3, 3.1, not 4.3, 3.1, 5.1. This is not even the right order. It's got all the numbers mixed up. So actually, what they really did is they actually extended the projection for 2024 by 25 basis points. That's the actual difference here. Now that I'm actually looking at some of the data, 2025, yeah, 3.1, 4.1, 4.3. So they actually did give themselves more room. However, they didn't give themselves more room this year. So it looks like they're going to pause. What they're saying is they're going to look to potentially pause. But next year they've slowed down their estimates. Interesting. Yeah, I might actually want to fade this news. To be honest with you.
That's what I'm thinking too.
Because I definitely read that wrong on investing.com. I had the order mixed up.
See, we're below this 102.52 now.
Yeah, it's interesting. But I mean, again, like they didn't give themselves any more room. The central tendency 5.1 to 5.6. Did they change that? 5.1 to 5.4. So they did contract a little bit. 3949, 3951. They gave themselves, yeah, okay. Interesting. So basically the amount they adjusted the projections for this year, they just added the difference into 2024. Like they're gonna make up for it next year. That's interesting. What an interesting concept. Yeah, I might honestly. I'm gonna look to close some of my EU buys here. Um, yeah, hold on. I gotta do that real quick.
Yeah, we're definitely at areas that are super interesting. To be precise, um, for EU looks super attractive above.
Yeah, so well, family, what I'm seeing inside of here is again like the talks of them expanding their road for how high they can hit the federal funds rate or how high they projected to be this year is more or less the same thing that it was. Again, they had a little bit more room, or they gave themselves a little bit more room in like both years, but they're really not doing too much different. So it's like the expectation of a pause is still there, but in the longer term, they feel like they're gonna have to return back to doing these 25 basis points. So the way that I'm looking at this on like the charts, here, let me switch over to the charts, is that basically everything today is gonna just be used as like exit liquidity. Again, like when we look at the DXY, this is exactly what we were talking about on Sunday, right? Where you kind of get this push, you start to swipe this liquidity, but the news doesn't really support this. Doesn't support not this down move. It supports the down move, but it doesn't support like this, right? It doesn't just support like continuations from here. So like this sweep of liquidity is probably going to be pretty wise to attempt to buy into. Now, again, I'm going to want to see what Powell's got to say because I want to see their reasoning behind some of their thoughts on these numbers. But now that we've taken this liquidity, especially for people that have been in the premium, you guys know I've been waiting on this, and like EU again, like EU now has like filled out this wick. Again, I'm sure I could refine time frame and find some sort of other technical reason. Yeah, like look at the CB that probably just got wiped. Yeah, so it's like I'm most definitely, especially if these wicks fill and like I get more structure up here, I'm probably going to go into a bullish dollar.
Yeah.
Um, so yeah, that's why I closed out some of my EU buys. I think that was definitely smarter on my behalf here because I did get some good exits. And yeah, I think at this point we're good to continue trading dollar bullishness. Obviously, I could be proven wrong on this. I mean, if we start to clear like below here, this would be like my invalidation level. All right, we're buying. If we start to play like below here into like some of this imbalance, I'm probably just gonna assume it wants to fill out everything. But yeah, I would if again, you guys can do whatever you want to do, but I would start to look short on EU, look short on gold. I mean, gold's been already kind of selling off already. And I'll be looking to go into dollar pairs. I mean, USD CAD we talked about this morning. Again, like yeah, Kyle probably looking at this in a very similar way. And we talked about like once it makes it down here, this would be like good buying. So yeah, man, that's what my thoughts are.
Hell
We
yeah.
will see if time dictates us right or wrong. But
Yeah. No, I'm
yeah,
in.
even Bitcoin did its little blow off top today. Yeah.
Yeah, no, I'm in agreement, bro. I also think that this does eventually get faded off. I mean, we're already seeing it happen right now, but it's still so early.
Yeah, I mean, you're probably gonna get some sort of wick until Powell, and then Powell will come and fill that wick, and then that's always how this goes. So it's like you look at like EU, and like what is it, like a 5 minute wick or like a 15 minute wick that's probably gonna like live up here, right? Like so it's like who knows? Like maybe this closes like down here and it leaves this wick. And then usually what happens is usually Powell's stupid mouth opens and he says something and it fills the wick. And
Mm-hmm.
then you start to kind of correct back, and then like this is where you want to kind of get in those shorts, and then see if you can get that spillover after he stops hyping up whatever he hypes up. But yeah, that's what I would look at because again, I don't think this is yeah, this all looks like exit liquidity. Like, oh my god, we broke structure. It's on the buy.
Right. Let's see. Able Thursday pound interest rate decision 50 points. I mean, yeah, it's tomorrow, man. So we'll see. It's gonna be interesting though. If they do 50, man, then they're clearly realizing how screwed they really are. Let's see. Facts looks like a retracement coming. Looks like it's mitigating. Fire. Do you see the accumulation? They said, do you see the accumulation, Skags?
On the DXY, yes. That if you're talking about on the DXY, yes. Yeah, we've been kind of stalking that, and you might have even seen on my chart like the longer term DXY, like idea that I've been playing. I wouldn't even really call it accumulation as much as I would call it just like its absorption to the buy side. I don't think this is going to be accumulation. This will be redistribution, but I see the lower time frame stuff that makes this a possible like strong low or liquid low or whatever you want to call it. But again, this has been the path. I think I drew this on Sunday for you guys on the Sunday call. This is like the path that I drew out. And again, I remain committed to it. There's no reason for me not to. You know, I drew this from wherever it starts. That's where I drew it from. So you can see the idea here. There's no reason for me to deviate from it. Now I have the fundamentals to align with it, and that's all I need.
Yeah.
So
Yeah, interesting, man.
yeah, are we gonna pull up Mr. Powell for everybody to listen to while we're
Yeah, I mean, we could. I'm trying to. Now that it came out, bro, now I'm pretty confident in an idea to take advantage of. We just need price to get to the right area. So if Powell can push price to where we want it to, like maybe obviously, fill this wick here on EU, then we can go short. I would love for gold to close the way it is now, and then go ahead and give us that opportunity to fill this wick to the upside and maybe start shorting around that 1970 level. That would be interesting. I would like that. Now just keep in mind though, gold is running its own race right now, right, to say the least. Just because of everything that's happening with all the uncertainty with the banks and stuff, So I obviously a lot of traders love to use correlations, and I do as well. But gold is pretty much running its own race, So just be mindful of that. I still will be looking to short this thing above 1970s, but I'm also mindful of the fact that that strength could eventually just come back because of everything that's happening. Let's see. Interesting, man.
Yeah, man. I would love to see USD CAD fill 1.36685. 1.36685, man. We can get that basically the same thing that what Skag's looking at on EU, but for USD CAD longs.
Yeah. I think we're in alignment. We just want to get the move that we want to see now. I mean,
it would literally suck.
You need to take out all these early buyers. All the people that are buying right now with their stop loss below this wick. I'm just trying to scoop up their ignorance. That's all.
That's a fact.
Hey, man, there's also a possibility that doesn't even happen, and we just whipsaw the other direction.
There is, yeah, but if that's the case, I'll find another entry. Don't worry.
Yeah. I mean, I'm in alignment. I would love to see that wick taken out, but I've also seen a lot of times FOMC just decides to just whipsaw. I don't think now is that time. I'm just saying sometimes it does. It is a pain in the ass.
Yeah, we shall see. That's for damn sure. We shall see.
That's okay. I mean, I mostly just want to hear Powell's reasons for doing certain things here.
Yeah. It's going to be interesting.
I wonder what the people that thought we were going to get 50 basis points are doing right now, because with the projection switch, it's kind of interesting.
Let's see. I'm in sales. Yeah, it's caught sales around 1965. You caught sales around 1965 for gold.
Who said that? Is that Alex? He posted in the Discord too.
No, that was Marcos. Shout out to you, Marcos. That's a good trade, bro. If you're still
shout out to both. It seems like everybody's seeing the same thing there. I like it.
Oh, you shorted after the spike. Is that what you're saying? Like after this initial spike, you started shorting, Marcos? That's a nice grab. Let's see. Agree. Gold has either leading or lagging. I see a lot of divergence. Yep. If Friday's PMI comes out lower than expected, would that switch your sentiment to a dovish Fed? That's a good question, by the way, D. Warner. I mean, what we've been seeing.
What was the question?
He said if Friday's PMI comes out lower than expected, would that switch your sentiment to a dovish Fed? Now, keep in mind what dovish means, guys, right? If we pause, that doesn't necessarily mean that they are dovish. Dovish means that they are planning on lowering rates, that their intentions are to lower rates. I don't think I could see them lowering rates, although I do believe, obviously, there's a lot of talks about it now. I just can't see them doing it just yet. Like, I think they're gonna keep rates pretty high just to fight off inflation, right? So just keep that in mind, right? A dovish Fed means that they are intended to lower rates. I think that they're just gonna pause rates for the next couple months to see how the market and everything that they've done so far, how it actually plays out, right? Because when it comes to monetary policy, family, there's a major lag from when they actually implement it to the fact that the market starts to actually see it, right? And that's why they're now at the point where they want to actually pause to allow everything that they've done to actually finally catch up, to see if it's something that was beneficial for them, right? So I don't know. That is a good question though, right? But I don't think they're gonna turn dovish just yet. I don't think they'll turn dovish until they get inflation back towards that
Yeah,
2%.
the idea of a pivot is still too early, especially since now they just increased the projections for next year. That also lets us know that again, like the increase in projection for next year tells us a few things. One, it tells us that if they were planning on doing X number, so like let's say they were planning on doing like, let's just say three hikes of 25 basis points. If they increase the projections, that might mean that there is, one hike that they took away from that projection or added to the projection for that matter.
Mm-hmm.
So it means that there was adjustment, even small,
With that in
that
mind, how
they're either increasing or decreasing by, a little bit more, a little bit less during a specific meeting. So again, like for us to assume that they're going to pivot and actually start decreasing would be you would be playing a dangerous game. Like
Yeah.
again, they've said for a long time that rates are going to have to remain high. Right? I've said this. We all reiterated this. I don't think anybody has begun to say that like they're going to backtrack on increasing rates. But when they pause, it's going to be a good 6 months, 9 months,
Yeah.
that you're going to sit up there. So
Yeah, exactly. Right. So, you're on point, D. Like you really are, right? What you're understanding is just understand what dovish actually means. I truly believe that they're gonna pause, and they'll pause for a while before they ever become fully dovish. Let's see, made a quick 3K on my challenge on gold. Let's go, man. So all you guys that are taking trades right now, man, for one, you guys are absolute savages, and shout out to y'all. I know I'm still on the sidelines. Let's see. This is beautiful. If we compare the Bank of Japan CPI and the Bank of England, you will get the answer where GJ's heading. Listen, I'm with you, Eric. I'm with you.
yeah, I mean he makes a good point. I mean, again, like the pound's inflation does remain high. It's just a matter of is the central bank going to act on that information.
Yeah.
And then GJ too. I mean, GJ has returned to its safe haven status. So I mean, stay woke. The yen has reclaimed its safe haven status. It is trending beautifully with gold, and stuff like that as well. So, again, keep an eye on the world stage because, interest rates are not the only thing. China and Russia out there flexing for no reason. And if you think it's for no reason, you're ignorant. But again, remember what I told you guys, the timeline continues, that Chinese Taiwan timeline continues to move. Those pieces of the puzzle, that war puzzle continues to move. It may not make headlines all day, every day. People may make fun of like the way that like these guys have like a giant palace and they have to walk down this giant hole. I don't know if anybody watched like the whole meeting between them. That's kind of funny. I watched it, but it's like it's really over extravagant for no reason. But again, like there are chess pieces being moved in ways that affect currencies that again some people may have already forgotten about. But that Chinese Taiwan timeline continues to move up. BRICS continues to move up. ISO continues to move up. So there's a lot of other factors floating around as well. Don't get so caught up on interest rates and inflation, although obviously very important. But there's a whole lot of other chess pieces that are actively moving around too.
Yeah. There's a lot going on, family. I'm not even gonna lie.
Yeah, I just got to bring up the whole China Russia thing because again, that timeline continues to move up, and we said,
It's moving
I did
fast
say
too.
around mid 2023, like around basically June, July, August, the summer is basically when we expect China to start moving some of its chess pieces towards Taiwan there, and I expect that to shake up markets pretty heavy. So
It is moving faster than you might assume, family. That's for damn sure.
yeah, the pieces move silently for a while until one of the pieces attack, and then it gets very loud very quick. So
Mm-hmm.
just keep in mind, it's not a problem that goes away. Again, I don't wish that upon anybody or anywhere in the world, but it's stuff that you have to be aware of because unfortunately it does affect the stuff that we trade. So
That's a big fact, bro. Let's see.
yeah, keep your eyes open. Little warning. Let's see what else we got in the chat though.
Let's see.
Let me see. Let me
Does one
see.
more
It wasn't Fed on
increase? What were you gonna say?
ITR.
Which one are you reading, Skags?
I'm reading metals right now. What time does the foreign currency market open in the USA, and also what time does the New York Stock Exchange open? So the New York Stock Exchange opening bells at 9:30 a.m. Eastern Standard Time. The New York session for like currencies and commodities usually starts around 8, which is basically pre-market. Um, so that's kind of like where the overlap is. There is some like currency overlap. I think it like extended to like 5 a.m. or like 6 a.m. But there's no like official, like I don't know, there is an official time for that, but like you don't really see a volatility increase at that time, so to speak.
Yeah.
So
Mm-hmm. Let's
the
see.
more important times are like the 8 a.m., 8. It's basically every half hour after 8 a.m. So it's 8 a.m., 8:30 a.m. Like you could make the argument that maybe 9 a.m. has nothing going on, but then like 9:30 a.m. and then 10 a.m. And the reason being is a lot of those are like news releases. So you have 8 a.m., which is commodity open, 8:30 a.m., which is like soft data releases, then 9:30 is New York Stock Exchange open, and then 10 a.m. is usually again continuation of like soft data releases. So
Yeah.
it's like almost every half hour between 8 a.m. and 10 a.m. Eastern Standard Time is like a new little like volatility trigger that comes in.
Yeah. No, that's a fact. AJ asks, does one more increase or hike worsen our economy or help? I mean, any type of interest hikes is to quote unquote worsen our economy. You gotta understand, like when the Fed uses this tool of interest rates, they're hiking it to kill demand. When you kill demand for spending as a whole, that is going to quote unquote worsen our economy per se, right? So any type of interest rate hikes is typically going to continue to dry up demand. And since our economy is heavily on consumer spending, I think consumer spending makes up like, I don't even know, 60, 70% of our GDP, something like that. That's obviously not going to be a good thing for our economy. Let's see. These are great questions, though, by the way. You guys are bringing some good questions today. Let's see. Wasn't Fed on an intra rate hike? What do you mean by that, Sammy? Wasn't Fed on an intra rate hike? I mean, they have been raising rates for months now. If World War III was to break out today, would that be dollar bull? Because military spending will increase and the fear. I mean, if World War III broke out today, right? Simple question. Do you feel comfortable investing into, let's just say, the stock market while there's that much chaos, uncertainty, and down in the markets? Probably not, right? If there's war happening, even though war is a big money maker, you're probably not going to be looking to spend into certain assets that are quote unquote risky, right? So in return, what are you going to do? All right, instead of you investing into the assets, you're probably going to just continue to hoard your cash, right? Hoard your dollars, so that will be dollar bullish.
Or you go into war stocks.
Or you go into war stocks.
Yeah, war stocks, oil stocks, something that obviously benefits from that, you know.
Yeah, what's the one major war company? What is their name?
I was trying to think. I had it at the tip of I still have it at the tip of my tongue and I can't.
I know it too. I just can't think of
Yeah,
it.
I know.
Oh,
But there's
man.
a few that I'm like bouncing around in my head.
Damn, I can't think of their
I
name.
could probably find it by
Oh, there we
ticker.
go. Lockheed Martin is one of
Yeah,
them.
like there you go, Lockheed Martin.
Raytheon is another one. Uh, I know Lockheed is definitely one of the big ones. So yeah,
Yeah,
investing into war stocks is good.
you go into the people supplying the plane, like Boeing. Boeing's another great one to go into because again, they make
Yep,
a lot. I mean, they make war equipment, planes,
yep,
shit like that.
yep. General
So
Dynamics is another
engines,
one. Yep.
again, that's. I mean, like, listen, it's not we don't wish that upon anybody, but you know,
People's making money off of it.
Yeah, you want to talk about you want to be wealthy. These are things that wealthy people take advantage of.
Yeah.
It's just being smart, you know. I mean, you could sit there and not make money and, you know, say that that's evil. It's an option.
Yeah. I mean, Morris, I see your question too, bro, about comparing banks. I know you're asking Eric, bro, but I'll give you a very easy breakdown, right? So each of these central banks are obviously operating based off of their own needs, right, for their economy, because economies and just the way of living for a lot of these countries are completely different. You know, so all you got to do is simply just go to, I mean, there's a few different things you can go to. Like, you can go to, obviously, the interest rates of these banks. You can go to how their inflation is. And we're talking about the central banks, right? See how their inflation has been handling. You can even look at the yields that a lot of these central banks are giving out, because yields also give out a good story, right? So there's a bunch of different factors that you can utilize to compare different central banks against each other, all right? And yeah, just even looking at the fact that a central bank could be hawkish and one could be dovish is another thing to look at, right? Like what their intentions are moving forward. So there's a lot of different things that you can look into for the comparison of central banks. Let's see. Textron is another one. Why did gold go down during the proxy Ukraine war? It normally goes up in uncertainty. That's a great observation. That's something we spoke about as well, as the fact that the gold itself, which was normally used as a safe haven for the past couple years, was not doing such that, right? It wasn't literally, it was acting like a riskier asset where it was following the stock market pretty, not going to say identically, but it was doing a lot of what the stock market was doing, you know, but so it wasn't it was not acting as a safe haven. But most recently, right, we're starting to see evidence of gold potentially being that one thing now, that one asset that investors are flocking towards again. All right, so it definitely wasn't correlating as a safe haven for the past 2 years.
It was already so extended though. Like, I mean, like this is like the 2 weeks that the news broke on Ukraine.
Yeah.
So it's like it did react. Like we can't say like it didn't. It definitely it didn't make new highs. But again, this is the reaction from oil too. It was like a 2 week thing. You know, it wasn't like drastic. Like yeah, like oil shot up and like again like remained kind of high because there's more demand for oil outside of just the fact that it's like you know the war. It's like there's really wasn't like crazy. I mean, even gold kind of like you know recovered a bunch.
Mm-hmm.
Like to say that gold didn't benefit from that, I think would be a wrong statement because it definitely did. Then you got to remember the environment. This is like right when they did the first interest rate hikes too.
Yeah.
So it's like you know, it's like the market took both information. The market took the war into account, and it also took what was going to probably be like an extensive like rate hike markets.
Yeah.
So it's like it took both into account. And like what eventually happened is like, you know, the market deemed that interest rates were more important in the macro than the war is, because again, this was already trading like kind of like a premium.
Yeah.
So it's like the market definitely didn't ignore it. The market, there's just other dynamics that were also pulling the other way that the market deemed more worth it.
Yeah.
So
that's true.
yeah, I think it would be a false statement to say that like the war didn't affect it or didn't have a great effect on it. It certainly did, but the monetary policy from the Fed also greatly weighed in on that.
Yeah. All right. So Jerome Powell is about to talk. I'm about to bring it up over here, and I'm actually gonna watch Meet Kevin's stream just to see what he also has to say as well.
Briefly address recent developments in the banking sector. In the past 2 weeks, serious difficulties at a small number of banks have emerged. History has shown that isolated banking problems, if left unaddressed, can undermine confidence in healthy banks and threaten the ability of the banking system as a whole to play its vital role in supporting the savings and credit needs of households and businesses. That is why, in response to these events, the Federal Reserve, working with the Treasury Department and the FDIC, took decisive actions to protect the U.S. economy and to strengthen public confidence in our banking system. These actions demonstrate that all depositors' savings and the banking system are safe. With the support of the Treasury, the Federal Reserve Board created the Bank Term Funding Program to ensure that banks that hold safe and liquid assets can, if needed, borrow reserves against those assets at par. This program, along with our long-standing discount window, is effectively meeting the unusual funding needs that some banks have faced and makes clear that ample liquidity in the system is available. Our banking system is sound and resilient with strong capital and liquidity. We will continue to closely monitor conditions in the banking system and are prepared to use all of our tools as needed to keep it safe and sound. In addition, we are committed to learning the lessons from this episode and to work to prevent events like this from happening again. Turning to the broader economy and monetary policy, inflation remains too high and the labor market continues to be very tight. My colleagues and I understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. The U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 0.9%. Consumer spending appears to have picked up this quarter, although some of that strength may reflect the effects of swings in the weather across the turn of the year. In contrast, activity in the housing sector remains weak, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Committee participants generally expect subdued growth to continue. As shown in our summary of economic projections, the median projection for real GDP growth stands at just 0.4% this year and 1.2% next year, well below the median estimate of the longer run normal growth rate. And nearly all participants see the risks to GDP growth as weighted to the downside. Yet the labor market remains extremely tight. Job gains have picked up in recent months, with employment rising by an average of 351,000 jobs per month over the last 3 months. The unemployment rate remained low in February at 3.6%. The labor force participation rate has edged up in recent months, and wage growth has shown some signs of easing. However, with job vacancies still very high, labor demand substantially exceeds the supply of available workers. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing upward pressures on wages and prices. The median unemployment rate projection in the SEP rises to 4.5% at the end of this year and 4.6% at the end of next year. Inflation remains well above our longer run goal of 2%. Over the 12 months ending in January, total PCE prices rose 5.4%, excluding the volatile food and energy categories. Excluding those, core PCE prices rose 4.7%. In February, the 12-month change in the CPI came in at 6%, and the change in the core CPI was 5.5%. Inflation has moderated somewhat since the middle of last year, but the strength of these recent readings indicates that inflation pressures continue to run high. The median projection in the SEP for total PCE inflation is 3.3% for this year, 2.5% next year, and 2.1% in 2025. The process of getting inflation back down to 2% has a long way to go and is likely to be bumpy. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by a 1/4 percentage point, bringing the target range to 4.75% to 5%. And we are continuing the process of significantly reducing our securities holdings. Since our previous FOMC meeting, economic indicators have generally come in stronger than expected, demonstrating greater momentum in economic activity and inflation. We believe, however, that events in the banking system over the past 2 weeks are likely to result in tighter credit conditions for households and businesses, which would in turn affect economic outcomes. It is too soon to determine the extent of these effects, and therefore too soon to tell how monetary policy should respond. As a result, we no longer state that we anticipate that ongoing rate increases will be appropriate to quell inflation. Instead, we now anticipate that some additional policy firming may be appropriate. We will closely monitor incoming data and carefully assess the actual and expected effects of tighter credit conditions on economic activity, the labor market, and inflation. And our policy decisions will reflect that assessment. In our SEP, each FOMC participant wrote down an appropriate path for the federal funds rate based on what that participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 5.1% at the end of this year, 4.3% at the end of 2024, and 3.1% at the end of 2025. These are little changed from our December projections, reflecting offsetting factors. These projections are not a committee decision or plan. If the economy does not evolve as projected, the path for policy will adjust as appropriate to foster our maximum employment and price stability goals. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity and inflation. We remain committed to bringing inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening in labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
All right, Q&A now. I can't believe he didn't mention the coupon code expiring today. What is this? Everybody knows you can email me at kevin@bkevin.com.
How confident is the committee that the recent stress that we've seen and you've alluded to is contained at this point, and that deposit flight among mid-sized lenders in particular has ceased?
Thanks. So I guess our view is that the banking system is sound and it's resilient. It's got strong capital and liquidity. We took powerful actions with Treasury and the FDIC, which demonstrate that all depositors' savings are safe and that the banking system is safe. Deposit flows in the banking system have stabilized over the last week. And the last thing I'll say is that we're undertaking a thorough internal review that will identify where we can strengthen supervision and regulation.
Okay, just a quick follow-up. I mean, given all of the stress and the uncertainty that you've also alluded to in the statement, how seriously was a pause considered for this meeting?
Zero.
So we did consider that in the days running up to the meeting. And you see the decision that we made, which I'll say a couple things about. First, it was supported by a very strong consensus, and I'll be happy to explain why. And really it is that the intermeeting data on inflation and the labor market came in stronger than expected. And really before the recent events, we were clearly on track to continue with ongoing rate hikes. In fact, as of a couple of weeks ago, it looked like we'd need to raise rates over the course of the year more than we'd expected at the time of the SEP in December, the time of the December meeting. We are committed to restoring price stability, and all of the evidence says that the public has confidence that we will do so, that we'll bring inflation down to 2% over time. It is important that we sustain that confidence with our actions as well as our words. So we also assess, as I mentioned, that the events of the last 2 weeks are likely to result in some tightening of credit conditions for households and businesses, and thereby weigh on demand, on the labor market, and on inflation. Such a tightening in financial conditions would work in the same direction as rate tightening. In principle, as a matter of fact, you can think of it as being the equivalent of a rate hike, or perhaps more than that. Of course, it's not possible to make that assessment today with any precision whatsoever. So our decision was to move ahead with a 25 basis point hike and to change our guidance, as I mentioned, from ongoing hikes to some additional hikes some policy firming may be appropriate. So going forward, as I mentioned, in assessing the need for further hikes, we'll be focused, as always, on the incoming data and the evolving outlook, and in particular on our assessment of the actual and expected effects of credit tightening.
So this talk about additional firming is basically, rather than saying ongoing hikes in this statement, they changed it to additional firming. That's what he's referring to.
Increases and firming. Does firming imply a rate increase per se, or could policy firm without you increasing rates?
Good question. Good question, Steve.
Yeah, I think it's meant to refer to our policy rate. Really, I would focus on the words may and some, as opposed to ongoing.
Yes.
Ongoing. So we clearly what we were doing there was taking on board trying to reflect the uncertainty about what will happen. I mean, it's possible that this will turn out to have very modest effects. These events will turn out to be very, very modest effects on the economy, in which case, and inflation will continue to be strong, in which case, the path might look different. It's also possible that this potential tightening will contribute significant tightening in credit conditions over time, and in principle, if that means that monetary policy may have less work to do. We simply don't know. So,
do you have concerns that the hike you did today could further exacerbate the problem in the banks?
No, I mean, with our monetary policy, we're really focused on macroeconomic outcomes. In particular, we're focused on this potential credit tightening and what can that produce in the way of tighter credit conditions. I think when we think about the situation in the banks, we're focused on our financial stability tools, in particular our lending facilities, the discount window, and also the new facility.
Mm-hmm. Interesting.
Nick Timmeros of the Wall Street Journal. Chair Powell, in your testimony 2 weeks ago, you had indicated you thought the terminal rate would be higher. Obviously, that was before the stress in the banking sector. And I realize there's a lot of uncertainty, but can you explain at all to what extent your forecasts or those of your colleagues or those of the board staff incorporated today a material tightening of credit availability because of the stress in the banking sector, or are you waiting to see it in the data before you incorporate that potential tightening into your forecasts?
So, we've just come from an FOMC meeting, and the people who write the minutes will be very carefully counting. But I'll tell you what I heard. What I heard was significant number of people saying that they anticipated there would be some tightening of credit conditions, and that would really have the same effects as our policies do, and that therefore they were including that in their assessment, and that if that did turn out not to be the case, that in principle you'd need more rate hikes. So some people did reflect that in their SEP forecasts. I think there may also just have been, remember, this is 12 days ago. We're trying to assess something that just is so recent, and it's people, it's very difficult.
These are some great questions, man. But Skaggs, how you feeling on the markets right now, bro? Because we just continue to push
Yo,
higher.
can I have a co-host as well?
Yeah, I see that we've been continuing to push higher. I actually just took a little bit of an EUL trying to get into some potential dollar strength, but it does sound more and more like they've already made the decision that they want to pause. He's not saying that directly, but I mean, everything he says leans towards that for sure.
Yeah,
we'll see.
What you looking at, Kyle?
So I did just go ahead and take a stab at USD CAD. I'm running a 20 pip stop on this trade right here. It's merely the same idea we have on a dollar here. This USD CAD just looks a lot more cleaner to me. I really do like playing USD CAD. Not to do anything against EU, because I do feel like EU can play out as well. We're digging into this 4-hour candle, this order block that I do feel like we will get a reaction off of, based off of Skaggs' idea. If you look at the daily, it's filling in some inefficiency right here, trading into this daily candle, trading off of this 4-hour as well. I like the idea. It's just really don't really see a risk to reward opportunity that I'm favoring at the moment. But, if it were me, I would actually favor the USD CAD. Not because it's going to play out more than the EU, but it's just better risk to reward. This would be like my secondary entry down here. I like this imbalance to maybe add on, but to be honest, I'm just gonna stick with this 20 pip stop. It makes sense, and if it makes sense, it can make us dollars. So I'm gonna hold on to this one right here, and see if we can get a reaction off of this.
Yeah.
Yeah, I don't know how much I can trust currencies to gain against the dollar to gain against, or the dollar to gain against other currencies, because he's hinting at pausing. That's exactly what he's hinting at.
Yeah, 100%.
There's just no. It's like if EU didn't work in the area I was looking at and it blew right through it, I don't even know. I mean, I kind of jumped the gun a little bit, but it is what it is. But I mean, like I don't see any like logical reason to fight against what he's saying. I mean, like, obviously there's like opportunities for stuff to fade off, but like there's some things that are not even moving up. Like the crypto is not even moving up. Gold. I mean, gold looks bullish as all hell.
Yeah, no, I'm looking for reasons.
Yeah, it's tough. Man. It's tough to find something that's gonna stick against the dollar, or like have like actual, like give the dollar actual strength against it. I think like the only thing that maybe you can. What's UJ doing? Probably sinking.
I might take a. I don't know, bro. Like I want to take some stabs, but I know it's probably not.
It's just not worth it. I don't think it's not. You're fundamentally like with what he's saying, you would just be wrong. Like on a technical level, you could have reasons, but like it's difficult to go against the fact that he's basically saying they're pausing rates. I mean, they're out of room. What are they looking at? Going to 5.1? That's where they want to end the year. We're in March and we're at 5. Where are you gonna go? You can't go anywhere. You can't. You're out of space on the road, and they don't want to increase the length of the road. So.
No, the thing is, I've been looking at this USD CAD since last night, so that's why I'm just gonna.
I mean, again, it's worth a stab. You might get a reaction off of here. I just don't know what you're gonna get long term. I'm not saying don't take the trade. I'm just saying fundamentally, it's very difficult to go against what he's just said.
Agreed.
Yeah, it is tough, man. I mean,
look at the USD CAD daily candle. Like.
Oh, I was looking at that.
Yeah, like that. Like you have a lot of high hopes there. You know, and it's not even like it didn't test up today. Like it tested up today. You know, it's coming off a new fresh high. Like again, like I see the reasons for technically entering. It's just I don't.
And the risk to reward is there. That's the only reason I.
Yeah, I mean, but you can always force the risk to reward to be there. You can always draw your targets to wherever it favors. You know, that's like it's like something you gotta consider too. Like, what's the reality of it? I don't know. Again, like the trade's there. If you guys want to take it on a technical level, I'm just telling you guys though, he really is leaning towards pausing. But I feel you guys. Like, I'm still looking at EU. I still want to maybe. You know, take a little stab at it, but
I'm watching gold, man. Like I'm waiting to see what gold can present to us.
I feel like EU will give it. I don't know. I like it. I feel like it just might take some time, but
I mean, yeah, trust your strategy, Kyle, for sure, bro. You know
yeah, no one's telling you not to take the trade. I'm just telling you fundamentally what he's saying.
Yeah.
I mean, look at a lot of this stuff could be again. You could make the argument that a lot of this shit is overextended. Like a lot of this stuff is really. I mean, what's the volume on that gold? It's like gold's not even trading at new highs. That's still trying to catch up with the rest of the week that it had here. Yeah, it's like, look, you're getting like, look how much buy volume you have on the 1 hour chart for gold. But like, we didn't really go anywhere, you know, so to say. Like, we haven't really broken any like actual structure. So, yeah, you know, you can make the case for stuff. I would say though, you're probably better off waiting until a different session and finding an easier position.
Listen,
but
man,
I took a little something on USD CAD just because if Kyle was right, I'm not trying to hear it from Kyle.
That's what I'm looking at. I'm looking at gold, man. I swear, if we get
yeah, I'll drop a little 0.10% risk in my boy's name, no problem.
Okay. Yo, Up that to 0.25%, man. Come on.
Well, you want 1/4%? I don't know, bro. I already I already exhausted 1/4% on myself. So you're kind of
Oh,
getting
okay.
you're kind of getting the discount risk.
I get that.
I mean,
Black Friday
technically
special.
speaking, bro, I just closed out EU for like 400 pips. So I mean, I could get a little riskier on this for you.
You don't have to.
Nah, it's okay. It's okay.
While you do that, I'm over here hawking gold. Once I see a nice little 5-minute OB form, man, I'm in there. I like where we're at right now.
It's okay, Kyle. I'm still up 9K today on the funded account, so I got you.
Yeah, that's what I like to hear.
Yeah, man, risk it for the.
If this USD CAD trade loses, though, dinner on you in Miami.
No.
That's my caveat. I'll take the trade, but I gotta mitigate my risk somehow.
Let's see. Any fundamental reason why we raise the debt ceiling? That's a good question. I mean,
because what else are you gonna do? The debt's not gonna do. Getting the debt to go down is not easy. So it's either you're gonna not take on more debt or you're gonna raise the debt ceiling. Welcome to the crisis in America. It's like, cause like put it this way. Why raise the debt ceiling? Because what's the other solution? Give the government a solution to lower the debt ceiling by enough that they can continue to spend money. And it's like, if you don't have an answer for that, that's why we're raising it.
Mm-hmm.
It's again, that's another systematically programmed thing. The debt ceiling is like a myth. There is no ceiling. There is no ceiling. They'll push that debt until they die and it's somebody else's problem. And that's how it's been going on for generations.
Now keep in mind, family, where do you guys think, and this might be a trick question, it might not, right? But where do you guys think they're getting the capital to actually fund a lot of this stuff in the US? Like if they were to raise the debt ceiling, right, and they were to acquire more debt, who do they have to go to actually truly make that happen? Like, who do you guys think?
And before somebody says China.
Let's see. Somebody said I like EU at 109.250. 109.250.
I mean, it more or less just tapped 109.250.
I mean, it came within 10 pips of it. Like I actually had that 109.250 marked off as well to see if price can get up there. But I'm telling y'all, man, like.
Yeah, I had above 108.60, which just ended up failing me completely.
This 5-minute is looking interesting. If we end the full, I mean, we got 20 seconds left on this 5-minute.
Yeah, it's just though it's like even if these do react, it's like what's the chance they hold though? I mean, USD CAD and gold look the best. I'll give Kyle that. USD CAD, because USD CAD and gold have yet to break structure, so this could be like major signs of absorption. That's the only reason I hopped on USD CAD, because I just said how gold looked like probably the best as well. If you were going to try to take it to the sell side, EU is a little bit different because it's trading at like fresh highs. So might need a little bit more action behind it. But the rest of the stuff, definitely cases of absorption.
Yeah, I mean, go shower, Rob. Just leave the door open. I'm almost done.
Make dollars backed by gold or silver again should help eliminate debt. Desmond, what if I told you we didn't have enough gold to back the dollars at currently how many dollars are printed? Why do you think we left that standard?
Right after it happened.
Because we couldn't print any more money on that standard. Didn't make any sense. In order for us to continue to print money, we had to continue to acquire gold, which means we had to continue to have enough cash reserves to go out and buy gold. There's a reason we left that system. There's more paper money than they could possibly even back by gold. So I mean, they could do that, but like you want to talk about inflation, like you're gonna inflate the prices of a lot of shit by doing that. So yeah, definitely too late to acquire that solution. And the places that hold the most gold these days are, as you can imagine, China, India, Russia, and hence why they're coming out with bricks. Looks like Kyle's not gonna owe me dinner in Miami, though.
Shoot, I'm over here still. I might be a little late to the party over here.
Yeah, you are late to the party. If you were gonna take it, you might as well took it when it was at the extreme, like Kyle says, when the risk to reward is the best. Listen, bro, I'm a student of Kyle's.
No, I wasn't even looking at UCAD.
I give him a lot of shit, but I listen to him.
I was looking at gold, man.
Jeremiah, we did take buys on USD CAD, by the way. Sorry, Abel.
No, you're good. I'm chilling, man. I'm still on the sidelines personally. I want gold.
Does the
Man.
interest rate 5% mean dollar is going up and crypto is coming lower? So this is like, it depends on where you are in the cycle. As you're increasing rates to the 5% mark, yes, that's exactly why crypto fell from 65K all the way down to like 18. It's because you were in an environment where they were aggressively raising rates. Now today, yes, they brought rates to 5%, but they're hinting at pausing here or in the very near future, and they're not really looking to raise it by any more. So it doesn't really matter that they're 5%. What matters more is that they're not raising it anymore, which actually makes crypto more bullish than people want to accept that it is. I still don't think that people buying above 28, 29K are making the smartest of decisions, because I think you still will get cheaper pricing. But I have automatic buys that go through every day. So some days, like today, in 3 minutes, because literally mine goes through at 3 p.m. Eastern Standard Time, in 3 minutes, it's going to buy me some Bitcoin at probably what's going to be like damn near the high of the day. So great for me. And yeah, man. So it's like when you're talking about interest rates, it's not a matter of, it does matter if they're high, but it also matters more, are they continuing to raise them? Are they lowering them? Are they aggressively raising them? And right now they're looking to pause and kind of just keep them stagnantly high, which allows, assets like the stock market and crypto and stuff like that to actually, go up in value, so to speak.
Yeah.
By the way, April 17th, Crypto Boot Camp. I was going to say somebody dropped the link, but I think I'm the only person with the link. So I will drop that for you guys. If you're not fully educated in the crypto space and you want to take full advantage of the next bull run, I highly, highly, highly recommend you guys get on this boot camp. You guys can go take a look at the full curriculum. All you got to do is really put your email address in, and we'll, email that full curriculum out to you. You'll also see it on the following page. But I highly recommend you guys take a look at this, because we've been in crypto for 6-7 years now. That's where a lot of my great cushion money for trading came from. That is my bread and butter. It is something that I nerd out about, and I want to give you guys the opportunity to listen to me for 10 days and soak up all that same knowledge so you guys can attack the markets just as nice. And of course, I'll have the boy Abel there with me as well. We'll be tag teaming it. We'll be each doing basically, we'll both be there all 10 days, but we'll be like hosting 5 of the days individually. So
big tag team.
Yeah. Big facts. Big boot camp. Good information.
I just need gold to come back for me one time, bro. Like, that's all. Like,
hey, I just need USD CAD to fly, so Kyle could buy me some Chick-fil-A tonight.
Hey, I thought if the trade hits, you were gonna buy me lunch.
I heard that. I'm not gonna lie. That's
I thought.
Buy you lunch? I mean, listen, bro. We could pull up to Canes whenever.
Hey, I thought if the trade loses, I have to buy you food.
Yeah, but I mean, technically, in a way, you're still buying me lunch. I mean, you're making me money, so.
Oh, okay.
How do you think I'm gonna pay for my lunch with?
I mean, he wanted you to.
Listen, boy, I get lunch out of this deal either way.
Let's see, yo, family. This has been a question that we've asked for a while. Are you guys choosing Chick-fil-A, or are you guys choosing Zaxby's? And what's the other option we know?
No, see, first off, Chick-fil-A was never in the running.
So what was it?
It was always Canes or Zaxby's.
Oh yeah, Canes.
The Chick-fil-A wasn't a part of the equation. Right, well, they're good, but they're not that good.
All right, well, let's add Chick-fil-A. All right, are you guys choosing Chick-fil-A, Zaxby's, or Canes? What's y'all favorite, man?
Canes.
I'm a.
Tell Abel that you guys are vegan and that he's wrong on all accounts.
And he just embarrassed.
Listen, man.
Listen, nothing like some
Zaxby's
fried cauliflower or some hot sauce.
First of all, Zaxby's got the best salads if we really are going that route by far, and like their salads are elite.
Listen, I heard Jerome Powell exclusively eats Raisin Canes, so. If that tells you anything, if Powell eats there, I eat there.
I see one Zaxby's, I see 2 Zaxby's, I see a whole bunch of Zaxby's. I don't see no Canes, no Chick-fil-A.
Well, what can I tell you? Chat ain't cultured. I don't know what to tell you guys.
Zaxby's again. Look at that.
You guys know. I'll let you guys have your wrong opinions. It's all good.
Come on now, family. Y'all know which one's the best, man. Zax, look at all the Zaxby's, bro. I don't even see no Chick-fil-A's. I don't see no Kings.
Y'all out of your mind. We're not talking about the sauces, guys. We're talking about the quality of the chicken.
Bro, don't try to change the conversation, bro. Like, we're talking about the experience in its entirety, including the sauce. Like, all I see is Zax. I don't see no Kings. I don't see no.
All right. Whatever.
Listen, am I tripping?
Whatever. Y'all could have your wrong opinion.
Am I tripping? Yo, Kyle, do you see anybody in the chat talking about Canes or Zax?
That's
or
cool.
Chick-fil-A?
That's cool. Me and all the people that said Canes are getting Canes on me. So congratulations if y'all voted correctly. You get rewarded. I don't see the Zaxby people buying y'all Zaxby's. So
listen, man, don't try to freaking bribe them now. I didn't know we was.
All right, who took some of these trades though? Did anybody take Kyle's USD CAD? Let me know. Who
Drop a
actually...
$sign in the chat.
I mean, that's up a quick 30.
Or if
pips.
you guys took something else, let me know. I know a few people were looking at gold.
By the way, they are holding you to that Canes, by the way, because they're already in the chat.
I know they are.
Listen, man.
It's all good. I'll wait till somebody walks up to me at the FX Summit asking for it.
Great thing is, there even Canes in Florida?
I don't even know. You'd have to ask Kyle. I'm not even. I think there is in some part. I don't know.
Nah,
there's not where I live. Actually, I'm pretty sure there is.
I was gonna say, I think Canes is more like a.
Texas. I think it says more like a South. I think Florida is lucky enough to have it. Like if not, we'll go to Wawa.
Wawa, like how?
Yeah, we're not going to Zaxby. Well, yeah, we're gonna go get like shakes or something, bro. We ain't gonna go get
how
food.
do you even bring in Wawa into the?
Nah, man, Wawa
drinks,
is more like a
like a gas station, bro. Like that's
like a grab and go type of thing.
Yeah, it's like what's wrong with that?
Canes in Florida.
Some of the best food I ever had was off a food truck.
They do got Raising Canes in Florida. There's only 3 locations though, and there's one right on Miami Beach, family. So everybody hold Skag to it. Probably gonna be right outside of our convention center too. So hold Skags to that. Let's go. And he gotta buy me some too now, just cause.
Nah, you gotta prove you said Canes in the poll though. If you don't got proof, then
I mean, I'll take the screenshots for them. You
better come with your receipts.
Listen. Limitless, you called Canes. Makai, you called Canes. Kayla, you called Canes. Pedro, that's Canes on Skags for you, my brother. Cody, Canes on Skags for you, my brother. Let's see. And I was definitely blind to all the Canes comments for sure, Kayla. I'm dead serious about that for sure.
Yeah, I was gonna say, there seemed like there was a few more there than you wanted to let on.
Oh yeah, no, there was a bunch. I'm not gonna lie, there was a bunch of Chick-fil-A's and Canes. And my guy Jerry even threw in Church's chicken in there.
Oh, I love food. This is why I trade, family. I trade to eat.
Let's go, Kyle. Good call, bro. See, that's trusting your strategy at its finest. Like trusting what you believe in, man.
Yeah, I also went short freaking EU.
Oh, here goes gold just tanking, bro. Why gold? You're not even giving me a chance.
Why didn't you just push the button when we pushed the button? I was doubting it and I still took it.
I mean, gold was already down like from where I wanted to, like 60 pips, bro. So like,
nah, that's a fact. Skaggs was literally like, man, it's not gonna win. The daily can't. But you know what? He took it.
I still took it. I still took it. Because again, like I mean, that's what I wanted. It's what I wanted. It's just not what I was seeing. Again, though, he still is talking and was talking about pauses. It's just a matter of a little early to push on the button.
Damn, man, everybody.
And I still can't even really see what EU is fading off from, like in terms of like technicals. Like there's not like aside from you executing on USD CAD, there is nothing really up there.
Damn, man, looks like I can't even afford Canes. Me missing this trade, or Zaxby's.
Nah.
I'm gonna have to go and beg for some Zaxby's and Canes at this point.
Let's see, how much am I up on USD CAD? Yeah, that's a little 1,500. Let's go.
Let's see. Took UCAD, got stopped out of EU. Yeah, that's unfortunate. I'm not surprised.
Yeah, the EU trade we took got wrecked. I mean, I'm in it again because I re-added on my risk. Because again, I just closed out a lot of my long positions, so I have the extra equity to play with. I could be a little bit
in AU shorts. All right, Desmond, let's get it, bro. Hopefully, you're in massive profits from those golden AU shorts.
We got Dave's Hot Chicken. I've had Dave's Hot Chicken.
I've never had Dave's Hot Chicken. Is Dave's Hot Chicken?
I've had it. I've had it once, and I'll tell you why, bro. When I was in New York, we were buying these pickles, and they were like these spicy pickles, and I still have them. Like I have them here. They're great. They're amazing. They're like Dave's hot spicy pickles. What I didn't know though is it's actually a restaurant.
You in New York buying pickles, my boy?
Hey, you don't like pickles? Bro, don't even make shit dirty.
Hey man, listen, for my New Yorkers, they gonna say "ayo" for anything.
Yeah, I know.
Any pickle talk, any hot dog
Listen,
talk, it's an
if you don't
"ayo."
if you don't like pickles on your burger and stuff, bro, you're out of your mind.
Nah, I definitely
Especially
like
spicy.
pickles. Pickles is lit.
So Kyle, what's my TP on this, bro?
We up a solid 40 pips on that already. Y'all going crazy.
Yeah. I don't know. Am I just gonna close out? I'm just gonna close out now.
I mean, Kyle, what are your thoughts, bro? You gotta lead the way, my boy. Like, are you gonna try to hold to that 1.38 level all the way up there?
Yeah, no, definitely don't close out, bro. I'm gonna take partial around here. I mean,
You don't think there's a chance it comes back that I could just rebuy it?
And there's always that chance, right?
There is a chance.
Now, Kyle,
I feel like if I close my trade, it'll continue shooting up for you, and it'll be better.
Now, Kyle, bro, are you up 3 times your risk right now? Because according to your rules, you said whenever you get up 3 times your risk, you close partials.
It's not quite there. It's almost there.
I mean, they wicked it. I ain't gonna lie, it wicked it.
That is true, bro. That is true.
Listen, I'm just making you stick by your rules, my boy. Like
your rule is a 1 to 3. That's your rule.
Yeah, he goes.
That is my rule.
My rule is on the first break of structure on the time frame that I did my analysis.
That's exactly what I'm aiming for. I'm aiming for.
Yeah, so like I would have to break above, like up into that 137.60, and that's where I would book.
Because this is just such a nice trade. Like I'm just like, I'm not sure if I want to take something right now. I'm actually.
It hasn't even really played out. Like it's a 1 to 3, sure, but it hasn't like actually made like a substantial.
And y'all getting too much money, man. 1 to 3s is fire. Y'all boys getting too much money over there. 1 to 3, I'm closing something.
It's just like,
I mean, if I closed out all my 1 to 3s, I'd never catch my 1 to 19s.
I mean, you can still catch those. We're not saying fully close out.
Yeah, but that's a lot of money on the table.
This is Kyle, Skaggs talking Kyle out of his rule. Yeah, Eric. That's exactly what it is.
Nah, man, nah. I like.
Nah, look how bullish it is, bro. If you listen, if he would have listened to you, you'd be missing out on money right now.
I'm telling him to listen to himself. It's not even me. Like that's his rule, not mine. Mine is also to break a structure. So,
nah, Kyle, understand what you got, bro.
The 3% is cool, bro. I'm not sweating, bro. I'd rather just wait for the BOS.
Take the break even like a real man.
He don't even go break even, bro, unless it's 1 to 3. So like, are you going?
It's 1 to 3 now. That's all I'm saying. Like,
you know what? I actually might just go break even.
I probably. What's your actual entry? Because my entry is 13661.
Mm-hmm.
They're pretty much the same. Exactly. Yeah, the same.
I definitely got the low.
Let's see. Jeremiah asked, as well. What trading prop firms you guys use? I mean, we're gonna be very similar across the board. My obviously FTMO is the standard, so you can never go wrong with FTMO. I'm a big fan of my Forex fund. I'm also a big fan of this new one that I've been testing out, and I don't want to promote it though until I actually get a payout from them, but. Yeah, so FTMO, my Forex funds are usually the go-to. I know Prosperity is one that has been, we have direct access to the people that pretty much run it. So, I don't know if Skaggs want to co-sign that one as well. But
yeah, I mean, Prosperity FX is good. It's a broker that has funded trading options as well. So at the very least, you know that the servers are always going to be up and working and stuff because that's their main business model, even outside of the prop firm, right? They're already running on proper servers and whatnot. But yeah, that's also a good one. But yeah, FTMO, MFF, go with the big name brand ones. Like if you're shopping around at like smaller brand name ones, and I hate saying this because some people take it the wrong way, but like if you were really shopping off the fact that one has a 10% target rule and one has an 8% target rule, you're probably not confident in yourself to pass. Because a truly profitable trader is not going to let 2% be like the differentiating factor of why they go to a different prop firm. Because a profitable trader just knows that's just like 1, maybe 2 trades that you're going to like have to snag to get that. So like if you're shopping off of that, I would question whether or not you're even ready. But yeah, I would again go with some of the bigger name brand ones. The more you shop around, the less you can trust it. And you know, FTMO has been around for years. MFF has a few years under their belt now, so you might as well just stick with what we know works, and you know, that's that.
Yeah. For sure, Ski. Let's see. Just go with the prop firms that people fail a lot. I mean, that's every prop firm, every single prop firm. Now, I just want to add on to that as well, guys. You got to understand, right? Like, how are prop firms actually profitable? Through people failing their prop firm challenges, right? Like, they make a big bulk of their money not by backing the profitable traders. Some of them do back the profitable traders, but most of them just rely on actual challenges failing. So if you go with a newer prop firm that's brand new, that does not have that many users actively using it, actively buying new challenges, and you're the one that actually does become profitable, then your profit might outweigh how much they're actually bringing in through failed challenges, right? And then you're not going to get paid out. So that's why it's important just to go with these larger ones that have a solid fan base, that have a solid community of people going to them consistently, so that you can guarantee that your payout is coming out.
Yeah, and unfortunately, that's how the industry works. Again, like, we've been around, we've seen some stuff.
I mean, we had conversations.
Not necessarily a bad thing. The brokers do more or less the same thing. So
yeah, I mean, again, we've had conversations with prop firms, so we know exactly how they operate. You know, we know that some of them A book, some of them B book, some of them actually back the traders, you know, that are profitable. Others, traders that might seem profitable, but they're a little bit risky, they don't back. So there's a lot of stuff that happens on the back end, man.
yeah, they make choices. Trust me,
100%.
especially the people that they're like, oh my god, I passed my challenge in a day. Like, that's super cool. I've even done it as well, but they're probably not putting money behind that person because they can't, you know, they don't know what you're like long term. If you're passing something in a day, that means you're over leveraging. So
yeah,
right away they know.
They're not gonna trust you at all. All right, let's see. Look at the statistics for MMF they released. Yeah, I mean, the statistics are, you guys really want to know the stats. The stats are that less than 2% of people that actually pass a funding actually get a payout.
Yeah, I think it's like out of 1,000 people, 6 get a payout, and then out of those 6, like maybe 2 get a second payout.
Maybe 2
out of 1,000.
Yeah,
so you know,
it's tough, but
yeah,
I think
you know, it's not uncommon.
Yeah, but I also think that the prop firm, even though it is tough because of the stats are there, I mean, the stats could also be there as well, even for people funding their own accounts. You know, I have a lot more confidence with traders if they're using a prop firm with actual rules, actual set of structure, some type of model that they have to follow, as opposed to somebody that just deposits 100 and is trying to flip that 100 to $1 million.
Yeah, I agree. I mean, the success rate is, I mean, that's a success rate even without, yeah, like you said, on any broker, it doesn't matter. That's always going to be the average success rate in this niche, you know?
Let's see. Any thoughts you guys looking into starting a prop firm? I mean, we had discussions, but that's not something that we're worried about right now. Maybe in the future, who knows?
Yeah, I don't know. I mean, to be honest with you, the rules that I would have on my prop firm would probably be vastly different than what's currently in the industry.
Yeah.
I probably wouldn't even have like a 2-step. I would probably have like a time-based. And again, I would have the rules. The majority of the people that like just that know they're not profitable long term, like just look at and say, I don't want to purchase this. I don't know. There's just like there's other different routes I want to go. I would rather open up an actual fund and like do the trading myself and have people that don't trade or don't do anything with their money except invest into other. Like, I would rather manage money at a professional level than put my money in the hands of, you know, more amateur traders that prove themselves over the course of like 10 days, you know? So to each their own. Skags, check your DM on Discord. It's Pav. Okay, I'll check it out. Yeah, Discord's the worst place to DM me, guys. Just so you know. I don't get notified about Discords on DM usually unless I'm looking at Discord and I see the new messages. Most things get filtered out. I'm in too many like NFT and crypto groups that like I get a whole bunch of spam and stuff. I don't check it. DM me on Instagram, if anything. Or if you're part of the Prophet Society Premium, then I mean, obviously you just get a hold of me there as well. But yeah, I'll check that out, bro. Appreciate you. Kyle, what's good, bro? I should have took profits on this USD CAD.
Nah, man. Nah,
I love messing with Kyle.
I'm gonna go break even.
Are you? Yeah, is that the recommendation?
1 second.
All right, cool.
Yeah, I am going break even, and I'm just gonna let it ride from here. And hopefully this thing is a swing, man.
All right, I'm break even, Kyle. Let's go. Let's run it. I'll come back in 2 weeks.
Yeah, we have some big targets up there, so you know, I feel like this could be the entry, and we have a really good entry. So why
Yeah, again, it's
jeopardize?
just like I said before, it's just a matter of it sticking because, again, I don't know how well even like the DXY doesn't seem to be holding up too well here, but
Yep.
we'll see.
Trust yourself, man. Hey, man. Say, man. That's a...
No, that's facts. But I'm okay with holding my full position here.
And yeah, family. So again, I think we're gonna pretty much wrap it up. I don't know if they have anything in the comments. Check your yeah. I honestly just found out there was DMs in Discord. I'm not even gonna lie to y'all. Like, just found out. I didn't even know you could really add friends neither on Discord. So I just found out about that as well. But family, again, a few things before we go ahead and get off this. Hopefully you guys enjoyed the session for one. If you guys enjoyed it, definitely go ahead and just show some love in the chat. Smash the like button if you guys haven't just yet. If you guys do want to get access, especially if you guys are new, right? If this is your first time jumping on one of our streams, just drop a 1 in the chat real quick so we know. Because this is what we do. Like, these are the conversations that we really have in the background, like on our premium sections inside of our premium community. We're talking about this all the time, right? And it's not always... we're not always in alignment, I'll say, right? There's times where, our streams turn into a damn debate show, right? But it's all because we're trying to really come up with logical reasons as to why the market is reacting in certain ways, right? So if you guys are enjoying this type of content, if you guys love the real and the authenticness that we're providing you guys, and if you guys want to really get better on not just doing technical analysis, but even a deeper understanding of fundamental and sentimental analysis as well, then go ahead and join our premium community, profitsociety.co. Sign up. It's $129 a month, so it's very affordable. $129 a month to get access to us, to do live trading calls, Tuesday, Wednesday, Thursday, live educational calls, all that good stuff, master classes, all that stuff, right? For $129 a month. Besides that, also the cryptocurrency accelerator bootcamp, 10 days. I've never done a 10-day bootcamp. I've done a 3-day, I've done a 5-day, but I've never done an entire 10-day bootcamp. So if you guys also want to be a part of that, then please make sure to go ahead and sign up immediately. Right, because the spots are going to be gone. Do not wait till the last minute to try to go ahead and secure your spot, because we cannot guarantee your spot to be saved. All right, so also go ahead and lock in that. The website is right there in the chat. And if you guys just have any other questions, family, our Discord, we do have a section of our Discord that is technically public. All right, so if you guys just want to be in our Discord as well, I'll send that in the chat as well for y'all. Go ahead and join the Discord and ask us any comments, questions, or concerns that you guys might have in that chat as well, right? But besides that though, Kyle, Skaggs, how you guys feeling? Are you guys good over there? Anything else you guys want to say?
Yeah, I'm feeling good. I'll see everybody on the crypto bootcamp, 10 days, and inside the Discord. But yeah, love and appreciate you, family. Been a great day. We'll keep you guys updated in the main community section of the Discord, whether you're a member or not. There's a free little community there. Bunch of people talking, lots of great trade ideas, lots of great traders. So I'll see you guys in there with any final questions. Love and appreciate y'all.
Let's get it, family. So we appreciate y'all, love y'all, and we will be talking to you guys all in the Discord a little bit later. Have a great remainder of your guys' day. Let's get it.